All right, let's jump right in. The market just came roaring back today, basically wiping out all that geopolitical anxiety from the weekend in one massive relief rally. Now, this wasn't just a simple bounce. It was a really powerful statement, and it was driven by some very specific news. So, what exactly flipped the switch for Wall Street? Well, it really came down to a 1-2 punch of good news. And what's interesting is that it managed to calm two of the market's biggest fears all at once. So let's break down exactly what those two catalysts were. Okay, first up, we got what was basically a gift from the Bureau of Labor Statistics, the wholesale inflation data, the PPI. It came in noticeably cooler than anybody was expecting. This was huge because it immediately poured cold water on that whole sticky inflation story that's been spooking investors. It was like an all-clear signal for riskier assets. And the second catalyst? Geopolitics. Reports started to surface about a second round of peace talks between the US and Iran. Now, that was exactly what the energy markets needed to hear. This news alone was enough to keep crude oil prices from creeping up over that big psychological $100 a barrel mark. So the S&P 500 shot up over 1%, the Dow tacked on more than 300 points, but just look at the Nasdaq, up nearly 2%. That right there tells you the whole story. This was a massive risk-on rotation. We're talking about capital just flooding back into tech. So now let's get into the individual companies that really defined the day. First up, we've got to talk about Micron technology. As a key player providing all that advanced memory and storage that AI data centers desperately need, Micron is, well, they're sitting right at the foundation of this whole AI build-out. And today, the stock just absolutely exploded. It surged an incredible 9.17% to close at $465.66. I mean, this wasn't just a good day, this was a massive outperformance that really helped pull the entire Nasdaq higher with it. So the crucial question is why? Well, Micron was basically the ultimate winner from that cool inflation report. The second that those fears of higher for longer interest rates just kind of evaporated, institutional money got its green light. It immediately spun back into the highest growth part of the market, and right now that means aggressively buying up the memory chip makers that are so essential for AI. All right, let's move to our next winner and see how this story builds. Oracle, the enterprise software and cloud computing giant, also had a fantastic session, but for a completely different and, honestly, pretty fascinating reason. The stock put up a really strong advance of 4.74%, closing at $163 on some heavy institutional volume. This move actually helped it break out of a recent rut, which signals that, yeah, the major investors are really starting to take notice. So, Oracle surged after it announced this really forward-thinking deal to buy fuel cell power directly from Bloom Energy. You see, Wall Street is waking up to a new reality. The biggest hurdle to scaling AI isn't the chips anymore, it's power. Investors heavily rewarded Oracle for proactively solving what is literally the single biggest physical bottleneck in the entire AI race. But, amid all this green on the screen, there was a sea of red in one particular sector. A major player really stumbled, reminding everyone that this market is still being very, very selective. And that brings us to Wells Fargo. As one of the big four U.S. banks, its earnings are always a critical bellwether for the health of the consumer and, really, the financial sector as a whole. And the stock got punished today. It dropped a painful 5.7% to close at $81.70. This wasn't just a slight lag. It was a significant drag on the entire financial sector. So why the sell-off? The bank basically committed what the market considers an unforgivable sin in this environment. The expectation is simple. When interest rates are high, big banks should be absolutely printing money on their loans. But Wells Fargo missed its estimates on that key metric, net interest income, which signals a real weakness in its core business, and, you guessed it, triggered immediate, heavy selling. Okay, let's pull this all together. Think of this next part as your key takeaways from today's action. These are the insights you can use to sound sharp tomorrow morning. First, on Micron. That stock jumping over 9%. It's just the perfect example of how tightly coiled the tech sector is right now. The second that inflation data gave the Fed some breathing room, capital just flooded right back into memory and AI infrastructure. It's a great reminder that any dip in these foundational AI names is still being treated as a massive buying opportunity. Now for Oracle. The stock jumping nearly 5% on that fuel cell deal, that represents a massive narrative shift for how we should think about tech. We're not just looking at who has the best AI models anymore. We need to be evaluating which cloud providers can actually secure the off-grid electricity to keep their data centers running. Oracle is actively solving the sector's biggest physical bottleneck. And finally, on Wells Fargo, the stock dropping nearly 6% is a stark reminder to be extremely careful with bank stocks this week. Just like Goldman yesterday, the market is aggressively punishing any weakness in the core business. If a massive retail bank can't maximize its interest income with rates this high, investors just aren't going to stick around to find out why. Wells Fargo dropped nearly 6% today after missing on net interest income, following a similar miss from Goldman Sachs yesterday. Are the big banks becoming uninvestable in this environment, or is this the perfect time to buy the dip? Comment below. Subscribe to Market Fluency for your daily edge.